Welcome to Raveum Insights. Today, we're going to pull back the curtain on something fascinating: how global investors are getting into the U.S. real estate market. We'll explore why it's still the top destination for anyone looking for stability and dollar-denominated income, and how platforms like ours are helping make that happen in a compliant, secure way.
For a lot of investors out there, from Dubai to Delhi, this isn't just some far-off dream. It's a serious financial strategy. But the real question has always been one of access. How do you even get your foot in the door?
So, to really get why this is such a big deal, you have to understand the sheer scale we're talking about. We're looking at a market worth around $47 trillion. But honestly, it's not just about the size. For investors everywhere, the U.S. has these two killer advantages: rock-solid legal transparency and, of course, getting paid in the world's reserve currency.
Okay, but here's the reality check. The median home price has shot past $420,000. That's up almost 44% since just 2019. That kind of price tag, well, it slams the door shut for most first-time international investors. The ambition is there for sure, but the cost of entry is just incredibly high.
And that perfectly sets up our first section here, the U.S. property puzzle. We're going to look at that fundamental problem investors have faced for decades. How do you square that ambition to own with the practical reality of actually being able to afford it?
All right, so let's look at how people used to do this. This brings us to the traditional paths to entry. For the longest time, there were basically only two ways in. And honestly, both came with some pretty big, often deal-breaking catches.
So, what were those two routes? On one hand, you had direct ownership. You get all the control, 100% of the equity, which is awesome, right? But you need a ton of capital up front, and all your eggs are in one basket. Super risky. Then on the other side, you've got REITs, or real estate investment trusts. The barrier to entry is super low. You get diversification instantly. But here's the thing. You're basically just buying a stock, not the actual building. It's liquid, yeah, but it's indirect ownership.
So for years, that was the choice, right? Go big or buy a stock. But this is where things get really interesting. Technology and some smart new regulations have carved out this incredible middle ground, and it's a total game changer for global investors. Let's talk about a new way to own.
So what exactly is fractional ownership? The keywords here, and this is super important, are genuine equity ownership. This is nothing like a timeshare where you're just buying the right to use a place. With fractional ownership, you and a group of other investors literally own the property together through a legal setup, usually an LLC. You hold a real piece of the pie.
Okay, so how does this actually work in practice? It's surprisingly straightforward. Step 1, a property is bought and put into its own dedicated LLC. Step 2, investors, like you, come in and buy shares in that LLC, becoming partial owners. And then step 3, the best part, as that property makes money from rent or goes up in value, you get your proportional cut. Simple as that. And this chart just lays it all out perfectly. Look at that. Direct ownership is way up there, out of reach for many. REITs are way down at the bottom, more like a stock. And right there in the middle, that's the sweet spot. Fractional ownership provides an accessible entry point for building a portfolio of real, tangible property, starting at a much more manageable level.
All right, so we get the concept, but how do you do it right? That brings us to our next section, your Smart Start strategy. Let's walk through a few key steps to make sure you're investing with total clarity.
Okay, tip number 1, and this is non-negotiable. Prioritize regulated platforms. You want to see compliance with SEC frameworks like Reg D and Reg S. Now, this isn't just boring legal stuff. These rules are there for a reason, to provide transparency and to protect you, the investor. Platforms like Raveum, for instance, focus on these pre-vetted SEC-compliant properties. It's all about safety and clarity.
This is one of the coolest parts. That lower entry point means you can actually diversify. Instead of dumping all your money into one house, you can spread it around. Imagine owning a piece of an industrial warehouse in Texas and a slice of a retail plaza down in Florida. You see how that immediately lowers your risk compared to just betting on one single property?
Now, here's a handy little rule of thumb you might hear about, the 7% rule. Basically, it's a quick check. The idea is that for a property to be cash flow positive, the annual rent it brings in should be about 7% of its purchase price. Now, look, it's not a magic formula. Taxes, upkeep, all that stuff matters a lot, but it's a great first-pass test to see if an investment has potential. And finally, tip number 3, you've got to understand the taxes. For non-U.S. investors, there's typically a 30% withholding tax on rental income from the U.S. The good news? You can often get that reduced by filing the right forms with the IRS. And definitely check for tax treaties between the U.S. and your home country. They can be a lifesaver, helping you avoid getting taxed twice on the same income.
So when you put all this together, the new tech, the regulations, these strategies, you start to see a massive shift happening. We're in our final section now, the future of access. What it means to be an entry-level investor in global real estate is being completely redefined right before our eyes.
And that brings us to this really powerful thought. It's not about how much capital you have anymore. The real barrier to entry has shifted. It's not money, it's clarity. It's all about having access to opportunities that are transparent, compliant, and that you can actually understand.
So, what's the big takeaway here? It's this. The U.S. market, with its strong rule of law and transparency, is still the most trusted destination for global investors. The difference is that now, access to it is becoming more democratic than ever before. Look, if this has sparked your interest and you want to see what some of these regulated, income-generating U.S. properties actually look like, I really encourage you to visit us at www.raveum.com. There's a ton of great info and educational resources there.
And of course, make sure you follow Raveum Insights so you don't miss our next discussion. We're always breaking down the world of regulated real estate investments and fractional ownership opportunities.
Thanks so much for joining us. This democratization of access to U.S. real estate, it's a huge deal for investors everywhere. The question really isn't if you can invest anymore, it's how you can do it smartly and safely. Raveum, reimagining how the world invests in real estate.